Welcome everyone in this video. We're going to analyze if XCN can be 10 cents. Don't forget to subscribe, and please watch till the end to understand. Currently, in Elliott wave theory, the price is still moving in the third wave. This wave is generally considered the strongest and fastest moving wave. Investors often observe that the third wave marks the beginning of a significant rally, fueled by the accumulation from the previous two waves. This phase is where the market experiences the highest momentum, and the price often breaks through previous peaks to reach important levels. In the current situation, while the price continues to follow this powerful third wave, it is approaching the upper levels of Fibonacci retracement levels. Fibonacci levels are important reference points for price retracements and potential continuation of an uptrend. Fibonacci levels are powerful tools, especially used to help investors forecast price movements. Currently, the price is nearing the upper Fibonacci levels, signaling that it is testing significant resistance. However, there is a more critical situation. If the price breaks above the current purple line, this could indicate that the market has no upper limit. In other words, although the upper Fibonacci levels are generally considered a resistance zone, breaking this line could lead the price to higher levels, potentially unseen before. This would imply a strong uptrend in the market, which could become a potential buying opportunity for many investors. This purple line can be considered an important reference point in technical analysis, because its break could mean the uptrend has no limits. For investors, this could be a very strong signal, as when the market breaks such a level, prices typically climb to new highs. However, this situation must be carefully monitored, as not every breakout guarantees a reliable uptrend. Fibonacci levels can help predict the general direction of price movements, but market fluctuations should also be watched. Therefore, if the price breaks this purple line, investors should adopt a careful risk management strategy. Considering the strength of the third wave in Elliott wave theory, such breakouts could actually increase the likelihood of the price rising further. However, it is also important to note that such a breakout could lead to high volatility and requires investors to be cautious. If this purple line is surpassed and the price continues to climb to higher levels, it could present significant opportunities for long-term investors. However, it's also essential to consider the sustainability of this move. If Fibonacci levels indicate that the price has entered an overbought region, a correction could also be possible. In conclusion, the price is currently moving in the strong third wave of Elliott wave theory and is approaching the upper Fibonacci retracement levels. A breakout above this purple line at this level could signal a significant potential rally in the market, but it is crucial to be cautious. These types of breakouts often lead to extreme volatility and could create big opportunities for investors, but sudden pullbacks may also occur. However, we must not rely solely on Fibonacci levels. Other metrics should also be considered to understand the situation more clearly. Keep monitoring. Looking at the chart from a broader perspective, there is an important formation to note: the cup formation. This formation can show how the balance between buying and selling in the market has evolved over a certain period. The cup formation represents a structure where prices decline for a while, then start to accumulate at the bottom levels, leading to a recovery, and eventually, a continued upward movement. Initially, the price decline is often associated with investors' doubts about the market and the dominance of sellers. However, this phase can actually signal a major recovery and potential buying opportunity. After the price reaches the bottom levels, it typically begins to accumulate where such formations start to emerge. Reaching these bottom levels often coincides with the peak of fear and uncertainty in the market. However, at this point, where the cup formation is forming, investors start to realize that the market is entering a recovery phase. This shows that buyers are slowly beginning to enter the market, and momentum is starting to shift. Currently, the price is beginning to recover from these bottom levels and is pushing forward to complete the cup formation. In other words, the price is starting to rise from this level and is moving toward the top part of the formation. If the price successfully completes the cup formation with this rally, the target price level could be a significant indicator. The completion of the cup formation often signals a major move, and the target price is determined based on the structure of the formation. In this case, the target is expected to be 10 cents. This target indicates that the price has reached the upper part of the cup formation and is encountering resistance. If the price manages to break through this level, the upward movement could accelerate, and the market may test new highs. With the completion of the cup formation, a specific path must be followed to reach the target. Typically, such formations expect the price to move upward for a certain period and eventually reach the peak point. This allows buyers in the market to make more purchases after the cup formation is completed, giving the price a strong upward momentum. However, for the formation to be successfully completed, the price must break through certain resistance levels and remain above those levels for a sustained period. Otherwise, the formation may not be completed, and the price could start moving downward again. However, the cup formation may not always be successfully completed. Market conditions, news flow, and other technical factors may prevent the formation from completing. Additionally, another factor investors should pay attention to is whether the rise following the completion of the formation will be sustainable. The completion of cup formations often creates significant momentum, but whether this momentum will be long-lasting must be confirmed by other market indicators. In conclusion, looking at the chart from a broader perspective, the price has reached the bottom levels of the cup formation and has entered a recovery phase. If the formation is successfully completed, the target of 10 cents is likely. Reaching this level means the price is approaching a significant resistance point. However, for the formation to be fully completed, the price must break through these levels, and strong buying pressure in the market must continue. We should patiently wait for it to complete. Looking at the price movements, in the previous period, there was a consistent formation of lower lows and lower highs. This could be interpreted as a sign of pressure in the market and the dominance of sellers. The lower lows indicated that buyers were gradually losing strength and sellers were exerting more pressure in the market. Similarly, the lower highs showed that the price was struggling to reach higher levels and was facing strong resistance. This type of market structure typically signals a bearish trend, which may cause investors to approach the market with caution. However, recently, a significant change has been observed in this downtrend. The price no longer seems to be forming lower lows and lower highs, and instead, it has started to make higher lows and higher highs. This signals a reversal in the trend and the emergence of potential upward movement. Higher lows indicate that the price has begun to recover without dropping to previous low levels, showing that buyers have re-entered the market with strength. This is generally considered the beginning of a bullish trend. Higher highs, on the other hand, show that the price is rising by surpassing previous levels with each new peak, indicating that buying power is increasing in the market. With the emergence of higher highs, investors may start to believe that there is strong buying pressure in the market and the price has the potential to rise further. This type of price movement is usually seen as a positive sign for investors and could mark the beginning of a positive trend. Each new higher high means that previous resistance levels have been broken, making it possible to set higher targets for future price movements. The price starting to make higher highs and higher lows indicates that the market has more potential to move upwards. At this point, it can be said that buyers are determined to push the price even higher. Additionally, these types of movements could mean the end of the previous downtrend and the start of a new upward trend. However, since corrections may occur after each upward movement, it's important for investors to remain cautious. It should be remembered that starting to form higher lows and higher highs does not always mean a continuous rise. Sometimes, the price may maintain this structure for a while, but then experience a minor pullback or consolidation. Such a reversal also indicates that the overall strength of the market is increasing and that investor confidence is being renewed. This is because in a trend formed by lower lows and lower highs, there is often uncertainty about the future of the market, and investors act more cautiously. However, when the price starts to make higher lows and higher highs, it can change the overall sentiment in the market to a more positive one and encourage investors to be more active. In conclusion, the price stopping the formation of lower lows and lower highs and instead starting to form higher lows and higher highs could be a sign of a significant market reversal. This could signal the potential for an upward movement and create new opportunities for investors. However, as always, it is important for investors to carefully monitor this movement and apply risk management strategies without being overly optimistic. Such reversal movements become more meaningful with strong buying pressure and increased market momentum, but it is crucial to remain cautious and consider other technical indicators as well. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.